What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. The weekend is here. We got a little bit of sun out here in California. Hopefully you have some where you're at. And it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. This week, we've got Google securing those NFL Sunday ticket rights. We've got Microsoft responding to that FTC lawsuit on their Activision Blizzard purchase. And we've got Tesla absolutely melting down. But we're going to kick things off like we always do with Meta Platforms. Start of the week at 117. Like most of these stocks, actually, surprisingly enough, held up actually pretty well, up 0.8%. Finished the week at about $118 per share. This is after Meta Platforms rose a little bit earlier in the week as the company agreed to pay a $725 million Cambridge Analytica lawsuit. This is based on, there were some political ramifications in this, but they were obviously collecting a lot of data. They got a lot of PR hits on this as well. They're going to settle for $725 million. Company is also facing new European Union charges over its Facebook marketplace. The European Union alleges that Meta ties its online classified ad service into its dominant personal social network. So this means that users of Facebook automatically have access to Facebook's marketplace. So look, I don't know the laws in the EU. That sounds rather flimsy to me. What I think Meta could do, and a lot of these platforms can do, is actually make the user interface a little bit more customizable. So if you have no interest in the marketplace, maybe you can get that off of your screen and off of your radar. Moving on to Apple, start of the week at 134. This one down basically 2%. Finished the week closer to, we'll call that $132 per share. This is after the company is heading toward a 52-week low, and it awaits a President Biden decision on patent infringement. These are based on some patents that allegedly are infringing on a privately held company based on something on the watch. Now, I am certainly, obviously, no legal expert. I did not know some of these things go right to the President of the United States. I assume if you donate a decent amount of money to his campaign, maybe that might get you a favorable ruling here. We'll certainly await to see that. That was a surprising headline if I've ever seen one. Now, we talked about in the beginning, YouTube getting those NFL Sunday tickets. When we get to the YouTube segment, we'll talk a little bit more about that. But Apple obviously was seen as the front runner, and if I had to put money on it, I would have said Apple would have taken it. They backed out at the last moment. From all the stuff that I was reading, they were a little bit unhappy with how things were going to be distributed. The NFL obviously wants a lot of control over those things. Apple probably wanted a little bit more control on their own. On top of that, Apple probably would have had to make maybe a little bit more of an investment than YouTube and YouTube TV and Google would have had to do, certainly on the advertising side. So all in all, probably a good fit for everybody involved. Apple slipped as Needham, which is an analyst group, cut their 2023 estimate, but they did highlight the fact that you've got a potential ad boost over at the company. The estimate is now a $171 price tag. Again, the stock is closer to 132. They now expect just 2% revenue growth year over year to $403 billion. And I believe roughly 2% growth on that earnings side as well. Eventually, or essentially, Apple just a no growth company. So you have to ask yourself, is it worth 21 forward times earnings if it's not going to grow its revenues or its profits year over year? Tough question to ask. And the question that a lot of these companies, but particularly Apple, is how is it going to reaccelerate its growth? It doesn't need to get back to like a 30 or 40% grower, but how is it going to get back to double digits? And that is a great question, and one that they're going to have to answer likely over the next 12 months. Apple is reportedly moving some of its MacBook production out of the country of China and moving it into Vietnam. This is certainly not going to help earnings, but it will help the supply chain and maybe some geopolitical risks that are associated with the company as well. And so earnings are going to be coming under pressure, revenue under pressure. If we have a recession, we are having a recession here in the United States and other parts of the world. And so how will that impact the multiple as we go into next year with Apple? What new thing are they going to come up with? That is the big question. question. Moving on to Amazon, start of the week at 87, down about 2.5%. Finished the week at about $85 per share. This is after Amazon avoided a fine. You rarely see these companies avoid fines. They're usually getting slapped around with them. But they made a deal with European antitrust regulators, and this is the kind of thing that I like to see, because the European Commission said that Amazon was using seller data that wasn't their own to benefit its own retailer operations. They were doing different criteria to get the buy box, the box that you can click on and buy on Amazon, and a number of other things to third-party sellers. And I totally agree with this. Now, I am a believer in Amazon. I'm a shareholder in Amazon, but I also sell on Amazon as well. And I can tell you, check. Amazon is guilty of all of these things. So I like this type of regulation where they identify a problem, they work with the company, they come to an agreement without a fine. Now, if Amazon violates this agreement, they should be fined into oblivion. But I like that it looks like they've worked things out, and I'd love for them to come to the US and work similar things out. Now, Amazon Web Services, otherwise known as AWS, secured a $723 million Navy contract. We saw quite a few of those get passed out over the past week. Amazon is called a Buffett buy, referring to Warren Buffett. I don't know about that one. You've got a 78 times forward earnings estimate on this one. I don't think Warren Buffett's going to be buying Amazon anytime soon. But according to Evercore, you do have long-term potential on this one. Obviously, Amazon has a gigantic sales. So obviously on the earnings side, if they are able to shave off some of the waste from a cost perspective and they are able to start churning out earnings, well, this is a company that already has mega sales. If they can match that with some earnings, well, this 77 times, 80 times forward earnings estimate might come down to a more reasonable level that more investors might want to jump on board. Really interesting Amazon from a technical perspective. Obviously, that is the back half of the show. Moving on to Netflix, start of the week at looks like $290. I saw a round number. You rarely see that. End of the week up about 1.7%. Finished the week closer to $295 per share. This is after Netflix is going to invest $850 million into a New Jersey production hub. I felt like we've read this press release before, but I believe it was the rumor that they were going to get this large parcel of land. Looks like they're going to purchase it for about $55 million. They're going to invest another $850 million. They're going to be able to produce, it's like a 300-acre site, and they're going to be able to produce different types of shows there. Certainly will actually change a little, it's a small amount, a little bit of the investment thesis over in Netflix. I mean, you could maybe value this whole thing at like $1 billion, just to give it a round number. Look, on a $132 billion company that doesn't have any significant like physical assets, a lot of the stuff they own are like, rights to television shows and things like that. Well, having actual real estate, physical real estate, kind of puts you more in maybe kind of the Disney category where they have physical real estate with their parks and their studios as well. I like what Netflix is doing there. The company is seeing slower subscriber growth based on their new ad-supported plan. They rolled out this $6.99 plan, and according to data and analysts, they're not getting a lot of people to sign up for this. I think what the ad tier is meant for is to maybe slow down the churn. So maybe there's a series you want to watch on Netflix and you want to blast through 12 episodes or 20 episodes or whatever, and you don't want to have to sit through commercials. But then you want to cancel your Netflix, but you cancel and then now maybe you just downgrade to the ad-supported one or something like that. I think that's something that obviously hasn't been proven with the financials. That's something when Netflix reports their earnings, I think we're like less than a month away on their earnings, something I will be keeping an eye out, and certainly other investors as well. Moving on to NVIDIA, start of the week at 163, and I tell you what, these high value stocks like NVIDIA and Tesla just got booted out this week. I mean, this stock down 7%, finished the week closer to $152 per share. This is after Micron, another chip maker, reported their earnings and announced that they are going to cut cost and cut spending as the outlook for their business looks a little bit bleak in 2023. Moving on to Google, start of the week at $90, end of the week down about 1.1%, end of the week closer to about $89 per share, kind of a roller coaster week for Google. Again, this is after the company secured those NFL Sunday ticket deal, and this is going to go, I believe, to YouTube, traditional YouTube that you're watching. They've added some new features on YouTube where you can maybe link like a Paramount Plus or something like that. Don't quote me on that. But they're also going to put this on your traditional, some people, including myself, have Google TV. So in opposed to maybe having a cable program or a Hulu or a Fubo, well, Google's offering is pretty much right there, and it's a decent price in my opinion. Now, it looks like they're going to spend about $2 billion to $2.5 billion annually for these rights. It's going to be an add-on subscription. It's going to be very similar to DirecTV. My guess is Apple wanted to do something completely different, whereas the NFL was like, nah, let's just charge people. I'm guessing it's going to be like probably a $300 type add-on to your Google TV. It's going to be very expensive to see these out-of-market football games. I think the main beneficiary out of this, certainly Google TV and YouTube will see a little bit of uplift. It's the people that create content here on YouTube, like football podcasts, sports betting stuff, that already are, building an audience and building their content here on YouTube. Well, now you're going to have an influx of fans that might not experience a lot of YouTube, might not experience a lot of content on here, all of a sudden kind of migrate over here and see, well, oh, look, there's a podcast about my favorite team. There's these live streams, all these types of things. I think that's where the benefit for YouTube. And I saw a lot of people discussing, they're going to have to get X many subscribers at this much. No, understand, any deal with a professional sports league, especially we're talking about the major three, the NFL, MLB, the NBA, but particularly the NFL, these are not to make money. Google does not get NFL Sunday ticket to all of a sudden when we pull up the third quarter results next year, we're like, oh, look, they are making all this more money because they have Sunday ticket. No, it might hit the top line a little bit on a company like this. It's going to be a rounding error. They're not going to generate profits from this type of things. It's to funnel you into their other things. Other online advertisers funnel you into YouTube. So then when you're watching videos like this, advertising plays, and that is how Google is going to make money on that. Moving on to Microsoft, start of the week at 243, so down about 1.8%, finished the week at 238. We certainly have end of the year tax loss selling, end of the year, and look, if you're a money manager, you probably want to show that you had some good performance, so you might even sell stocks that do well. I would probably just go to sleep these watch the FAANG stock recap show. I don't want everybody to tune out, but look, I would go to sleep in terms of monitoring your stock performance over the next couple of weeks. You're going to have selling, and then in the first of the year, you're going to have everybody donate into their 401ks, IRAs, and some people just lump it all right in the beginning. And look, that's maybe not a bad strategy this year. So you could have kind of a beginning of the year rally. Now, Microsoft's going to respond to that FTC lawsuit based on its $69 billion Activision deal planned acquisition. And their argument over at Microsoft is that they are mainly squabbling with PlayStation and Sony and maybe the industry over literally one single game, Call of Duty. And so Microsoft's argument is we're talking about one game in a gigantic industry. We're talking about a multi-billion dollar industry. And they are going to continue, and I'm going to refer to Microsoft here, that they are a, quote, third place console manufacturer behind both Sony PlayStation and the Nintendo. And then if you want to throw in PC gaming as well, I'm not privy to where that stands in the hierarchy, but I can imagine that maybe the Xbox might even be a fourth place console to actually play video games behind PlayStation, behind Nintendo, behind maybe even the freaking iPhone, let alone some kind of souped up desktop PC or laptop that people enjoy playing these games on. So Microsoft's going to contend this, and we'll see where this goes. This is in the hands of very, very capable Super Bowl corporate attorneys, probably. Now, Microsoft was added as an awardee for a $900 million Air Force contract. That's a ceiling on these contracts, but anytime, has a government ever put out a contract and not gone to the ceiling on it? Maybe at some point it has. Moving on to Tesla. Oh my, I said last week, hide your kids, hide your wife. You're going to want to hide your cousin, your aunt, and everybody, probably your whole block on this one. This stock, believe it or not, started the week at 152. It was down 19% this week. You would have thought that every single Tesla blew up in the owner's driveway or something like that, which would have been tragic because I have two of them sitting in my driveway not far from here. But it finished the week at $123 per share. Webbush is getting a little bit of negative, I should say. I'm losing my voice here as we move through this show, but they're losing some faith in Tesla due to demand cracks and a leadership void. So what they are seeing is Q4 deliveries will get them likely about a little over a week from today. We'll get them somewhere for Tesla. They're expecting those delivery numbers to be in that 410 to maybe 415 range. The previous estimate was closer to about 450. Some analysts are closer to 435. So Webbush definitely a little bullish on that, or bearish, excuse me. And then if you go to Tesla's website for one of the first times in a while, you are seeing inventory on the site. The other thing that they're doing, they're offering essentially kind of regulatory credits, or not regulatory credits. They're actually giving you cash back. Sometimes you see this with GM and Ford. They give you dealer incentives, I think is probably the way to, or a manufacturer incentive is the way to do it. You're getting $7,500 off if you take delivery of your car between now and then. Now, some of this could be due for two reasons. Number one, you had those new electric vehicle tax credits that don't actually go into effect for car purchases next year. So a very tax conscious buyer is going to wait till January 1st to buy their Tesla. The second reason you might see this is a year ago, look, they had one manufacturing facility out here in California making Teslas, and now they have two. I don't know if Giga Texas is fully operational and pumping these things out, but from what I've seen in the anecdotal research I've seen is they're pumping these cars out, and the traditional automaker kind of model is that you have 30 to 60 days of inventory on hand. When you look at a Ford, a GM, and a Toyota, when somebody wants to buy a car, it's there. So I wouldn't necessarily look at that they have inventory on their website and it only takes a week to get your Tesla versus 6 months, that all of a sudden we have this diminishing demand. I would wait. Yes, there is probably waning demand. The demand is not necessarily where it was, but I would wait until we see very firm evidence that demand has shriveled up, because we've seen announcements of going to Mexico, other countries, opening other manufacturing facilities, doing further investments in the facilities that they already have out here in California and Texas as well. I think we'd see a little bit more evidence of those things slowing down if demand was really, really shriveling up over at Tesla. Now, Tesla was up earlier today after CEO Elon Musk says, and Elon Musk has got a lot of politician in him. What he says and what he does are two completely different things, but he did say, according to, I believe, a Twitter Space discussion, is that he might pause his share purchases, or his share sales for 2 years. Now, obviously, the guy said he was going to stop selling his shares a little while ago, and he kept selling them. And so I wouldn't believe a single thing that comes out of Elon Musk's mouth when it comes to selling his shares. Here's how Elon Musk could boost some confidence into Tesla stock is he actually buys some shares, or not only him, but maybe some big investment. I know Kathy Wood's been buying it, and it's not a massive amount of shares, but if somebody actually starts buying these, or they talked about a buyback on Tesla's last conference call, maybe you don't necessarily have to start buying the shares when you announce a buyback, but announce it and talk about, is it 5 billion? Is it 10 billion? Is it 20 billion over 5 years, or whatever it is? That that would actually give some confidence into the stock. Saying, oh, I'm not going to sell any more shares for 2 years with no legal agreement, with it not tied to your executive compensation, is just, basically thin air, or a lot of hot air in a lot of ways with Elon Musk. So unless this is tied to his executive compensation package, or unless he reaches into his wallet and actually starts purchasing the shares, I wouldn't believe a word Elon Musk says when it comes to selling or not selling Tesla shares. Now, Tesla is down 61% over the past year, which has some investors talking value. You've got, a 30 times forward price to earnings. I was looking at the earnings estimates there. It depends on, do you believe the demand is going to be there in 2023? Do you think the Cybertruck's going to be a success? Do you think they're going to be able to roll out those semis? That's probably a little bit of a lesser story, but is the Model Y, the Model 3, and the Cybertruck going to sell like hotcakes next year? If you believe it, well, yeah, you probably are talking value with this stock. If you think the demand for those vehicles are going to fall off the map, well, the stock's very, very richly valued even at today's price. Tesla is set to pursue more layoffs and freeze hiring. We will, look, I'll criticize anybody on here, even when I own the stock, like I own Tesla. But what I love about Elon Musk is he's so quick. He's so quick to cut cost. He's so quick to make these moves. He will freeze hiring. He will lay off employees. He will cut spending to maintain some profitability over at this company. You don't always see that financial discipline, and that is one very, very, very positive thing about Elon Musk. Certainly there are some things that he has done that certainly has contributed, not all his fault, but has certainly contributed this stock having a very, very poor 2022 in terms of its performance, but his ability to drive profits and operating profits, very, very unique in my opinion. Now, Elon Musk confirms he will resign at the Twitter CEO once he finds a replacement. And this is kind of what I always thought. Okay, he took his personal money, and yes, he sold Tesla shares, but that is his right. He can sell his Tesla shares, and he could go buy bottles of vodka, or he could buy, social media companies. I really don't care. It's not my decision. It's not my money. And it was always my belief he was going to take over at Twitter. It was his new little toy. It was his new thing to play with, and he was going to play with it for a little while. And then, like my kids will get on Sunday for Christmas, and Merry Christmas to everybody out there. Look, they're going to get tired of their toys by the afternoon. And that's kind of how I felt about Elon Musk. And obviously a $40 billion purchase might last a little bit longer. And he was going to take a couple of months, put all his time into that, but eventually get a little bit tired of it, but eventually find his role there, and then put somebody in charge to be the punching bag and basically be the CEO of the company. He probably should do that, in my opinion, sooner rather than later. Now, moving over to the technical segment of the show, and I'll remind you, this is the technical segment of the show. There's a reason why I break this up, because I could do Meta and then jump over here to the chart. I could do Apple and jump over here to the chart, but I want to separate these two things, because the technical segment of the show is for shorter term price action. It's for a lot of people out there. I think this segment of the show is very valuable if you're an options trader, if you're a short-term trader, if you're trying to sell, if you're trying to buy. I try to answer a lot of those questions for you when we do this. So I know this is the investor channel, and I know my personal investing strategy is really just buy these freaking stocks and just kind of hold on to them. But everybody watching this channel has, a different thing. And some of you guys are great at this options trading stuff, and some of you are great at different types of strategies. And it's just my hope that this technical look at the markets and these stocks give you, in some cases, maybe a little bit of comfort, especially as we see these massive declines. Now, you'll see a new indicator. I brought that back this week. It is on the left-hand side. It is what is called a volume profile indicator. What it does is you select a period of time, and I will tell you, I have taken since the lows of March of 2020, so basically the dead low. I mean, it's not drawn in here perfectly, but I basically taken the lows of March of 2020 and taken it into today. And so what we are seeing is the demand for either an index, in this case the S&P 500, or an individual stock, like we'll look at here in a moment, where the accumulation has happened. Okay, the longer these lines are, especially the green lines, the more accumulation that has occurred at that price level. The smaller the lines, that means very few people actually accumulated the stocks at that price. And we'll talk about what that means from a value perspective here in a moment. But very first thing with S&P 500, we're just chopping along here. We are still certainly moving down our technical pattern. These downward channels are still intact. More recently, though, over the last 6 months, if you watch my video I posted a couple of days ago, or more of a macro video, I talked about over the last 6 months, we're basically in a 13% trading range on the S&P 500 up and down. And I know it feels like bigger than that, but it's just a 13% trading range. And it looks like to me, we're probably headed on the way down. And my guess is we'll probably bottom out here maybe at 3,600. If the bears really take over, we should make a new low and should reach some support based on this volume profile, probably right around 3,300 on the S&P 500. Again, plus or minus maybe 5% on that type of thing, but you should get a bounce on that one. You should get some early year buying, early year repositioning in the markets, and that could, my opinion, probably happen at the previous lows that we made back here at about 3,600. That would be an area where, look, if you want a dollar cost average, if you're, depositing into your IRA account, not the worst spot. Just understand there is a lot of overhead resistance from a volume profile perspective, and from just this technical pattern, there is not a lot of upside in the shorter term. So if you do want to lock in profits, that is certainly been something that has worked very well. Now, moving over to Meta, its volume profile is going to look a little weird because you just have this gigantic price difference that this stock has experienced since March of 2020. I mean, it's been as low as like $80 or $90, and it's been as high as nearly $400. And so there hasn't been a lot of actual sideways consolidation in this name. So for the most part, you are still actually looking pretty decent with Meta. This is actually starting to set up. Not exactly, but it's reminding me a little bit of Netflix, that you had this big kind of bottoming moment and now you're kind of chopping up here. You really want this to get above 122, retest this 135-ish, 130 area. You bust out above that, and boy, the momentum is with Meta. You get above. If you really want to be safe and you want to get into Meta, but you don't want to catch a falling knife, similar to Netflix, you're really looking for that breakout. You get that breakout. It's not as clean as Netflix was, but the momentum is clearly there once you break out of the top of the channel when it comes to Meta. Moving over to Apple, again, we've discussed the path of least resistance with this stock is definitely down. We'll get the volume profile kind of appearing here. A lot of acquisition or a lot of accumulation of the stock up at this level. You have the buyback over at Apple. Obviously, this is a large part of the stock market as well. A lot of investors too just pile into a dividend growth name like this, a buyback name like this. You have a lot of accumulation on this one. The stock is sitting here at 130. Sure looks like to me we're going to test this purple line at 123. Not really that concerned about that. Down at the bottom of the barrel, down here at 115. I tell you what, if you want a dollar cost average into Apple, you got a longer term outlook, but I wouldn't mind it here. I wouldn't necessarily do like a full allocation, or it wouldn't jump over myself to make that type of investment, but it's not necessarily the worst spot to do those types of things. Moving on to Amazon, this one has one of the more interesting volume profiles, and really with Amazon, you almost have to kind of extend this one out and down a little bit, and you do get a little bit bigger picture of it. Is you have a ton of accumulation on the stock in the green box that we've identified, down to about $82 where it is now, and up to 103. The exciting thing with Amazon is if somehow you get some momentum. I know that's like an easy thing to say. If somehow you can find some momentum in the market, boy, it could be like a hot knife cutting through butter, but like in an upward direction on a stock like this, because you don't have a lot of volume profile, a lot of accumulation over and above 103. So if you get the momentum and the sellers dry up on a stock like this, well, yeah, you could snap back. And I've talked about it a while. You could have a very significant rally in this stock, all the way up to like 130, 140. And really, from a technical perspective, it's still kind of in a downtrend. It still really hasn't done much other than had kind of a technical bounce higher. Now, obviously, that's like the super bull case scenario. You come back halfway up to the channel, still 85 to 117 is very good. Now, that's the bull case, okay? The bear case is you do something like Tesla and you just continue to walk down this channel. And I tell you what, if you dump out the bottom of Amazon and you're coming to probably $50, so we'll certainly see which direction Amazon decides to go. Moving on to Netflix, again, very similar to Meta, where you have this very wide spread from top to bottom. I mean, this stock was up, can you believe it, up at $700, and it was down here at like $150. Now we're trading not quite in the middle, but you're here at 300. As you know, if you've been following this channel, this stock's been in this beautiful uptrend. It's been kind of chopping along. It's going to have a tough time getting above 335. You have earnings on this stock on the 19th of January. So yeah, you're only about a month away. In fact, less than a month away on this one. I would assume this one will consolidate in this range, and then you're going to get probably a pretty large move. My guess is you'll probably set up heading into next year at the top of the range here. And this is just my assumption on these things. And then if you get any kind of negative news, then you could come back down to the bottom of the channel, but still things looking good from a technical perspective for Netflix. Doesn't really matter which way it goes. Now, moving over to NVIDIA. I was playing with this chart a little bit this week, so it might look a little bit different. I tightened up our channel lines with NVIDIA. I've got this orange line representing kind of a top of the channel. The bottom of the channel is this thicker red line. You've got an intermediate, like kind of upper trend line here is kind of a thinner red line. When we look at the volume profile on this one, clearly there is a ton of demand for this stock, kind of sitting right above where it's at. So I could certainly see NVIDIA heading into next week. You get, more negative selling into the stock market, tax loss selling, everybody kind of goes away. The buyers are gone and, all you have is sellers. Well, yeah, you could walk back to like 150, certainly south of that into kind of the 140s, even the 130s, even the 120s on this one. I actually wouldn't be concerned from a technical perspective. You got a low here, and if you can bottom here and then move higher, you've got a higher low here. Actually starting to look okay with NVIDIA. So we'll have to dissect it into next year. Certainly from a fundamental perspective, I have my opinion on this stock, but from a technical perspective, it could change that, and we'll certainly see that moving into next year. Moving on to Google, from a volume profile perspective, this one's actually kind of interesting. There's no like really, really clear spot. Yes, there's this clear spot down here at 72. I would assume that if Google, you get this big dump on Google out the bottom, that is where the buyers are going to show up very quickly. Right there at about $75 per share. You are, from a technical perspective at Google, at the bottom of this black channel line. Typically when the stock has gotten to that area, maybe it hesitated, maybe it dipped down below, but then you were followed usually by a relatively decent rally. So we'd actually expect Google to rally probably early next year. That is supported a little bit by the volume profile, and we've talked about how that $100 level, you got to get over that, and it's just going to be resistance for until it's not. And so for me with Google, it looks like you have a floor on this one at 75 and the ceiling's 100 and you're sitting here at 90. So you take that information for what it's worth. You certainly could trade around that from an option perspective, but a long-term kind of buy and hold investor, anything south of this like $85 range, from a 4, 5, 6 year time horizon, not necessarily that bad of an investment. Moving on to Microsoft, similar to Google, you have a lot of accumulation of these stocks at a wide range of prices, but particularly in the green box that we have down here, marked out between, we'll call it 194 up to call it 230, but especially right here in kind of the 210-ish region. So right now, Microsoft is sitting on the top of the box. Wouldn't be a stock I'd be running out and buying. In fact, there's other stocks that we cover here that I'd be more excited about. But if you pull into this box, you pull south of about 230, that is where it would be kind of interesting. Now, finally, get your popcorn out, because Tesla had a capitulation type moment. I wouldn't call this, textbook capitulation, but notice how quickly, this is, I'll draw it in. It's pretty obvious though, but we have just gigantic, just steep red candles showed up this week. On top of that, and I hope you're able to see this, but you actually had an increased amount of volume to match that. So that typically, when you match very steep downward candles, same thing goes for an uptrend as well. Steep downward candles combined with not record type volume, but certainly more volume than we've seen over the last several months, if not over the last year with Tesla. That is a very, very interesting moment for this stock. From a volume profile perspective, you would have wanted it to hesitate here at about 135 to 140. It didn't. And that is very alarming, because if this moment can continue, well, there is not a lot here. You do have some demand for the stock, probably more psychologically, right at about $100. If you get through $100 on this one, it is almost guaranteed. In fact, I might even put some kind of trade on for this one, that it would go from 100 down to 50. And I know some of you are like, $50, like what would the valuation be on the stock at that point? I mean, you're still looking at a stock that would be like $180 billion on its market cap. Certainly not a rich valuation from a Tesla perspective, but if you look at Ford, you look at GM, those companies are trading like 5 times Ford's earnings and like 0.3 times sales. If Tesla were trading at 0.3 times sales, I mean, you're looking at a stock that's probably worth maybe like $10. Not trying to say that could happen, but look, this is what the price action is giving us at the moment. I haven't given up on this company. I still think it's, look, it's a speculative stock. I put it in the same group as NVIDIA. You have the same type of allocation there. If you're overexposed to NVIDIA, if you're overexposed to Tesla, you're going to have a lot of tummy aches. Those stocks move, and you're also going to have a lot of weeks and months where things look great and you might have a lot of extra money. But you better hope Tesla finds some footing here over the next week or so, because I tell you what, you break through the $100 level on this stock, and it is going to get ugly, and ugly very quickly. But again, if you're able to find some footing here, there is some overhead resistance, but it's quite a bit higher up here at about 180. So you could have a solid 40% move on this type of name, and it's just getting back to a resistance level. Personally, and I'm speaking just for me personally, I'm just taking the rest of the year off, okay? There's going to be tax loss selling. Again, there's going to be money managers that need to show some type of performance. There's going to be money managers that are doing tax things that, look, I don't have to deal with. I'm not that rich. And we'll pick up buying into the new year. And guess what? Right in the beginning of the new year, the third week of the month, we'll get Tesla earnings, we'll get Netflix earnings, followed by Amazon, followed by Google, followed by Apple, and we'll get confirmation and some kind of guidance based on those companies' performance on how 2023 may or may not go. And so I think we'll just hold off, let the market do what it's going to do, certainly keep tabs on things and monitor the situation, but wait until January 1st to really start to decide how we're going to position ourselves for 2023. Hopefully you guys have a wonderful weekend. And on top of that, Merry Christmas to all of you. Have a safe holiday. Travel very carefully. I know it's very cold in other parts of the country. Please drive very carefully, and I hope all of you have a wonderful holiday, especially those of you that have young children like I do. It is literally the best time of the year. And for those of you that are out there that don't have young children and you are maybe contemplating on whether or not you have, I am going to tell you sincerely right now, having children is easily, it's not even close, the best thing that has ever happened to me. And around these holiday times, it makes it so much better. And these are the moments I will just remember forever. And so thank you for all your support this year. We'll obviously come back one more time before the end of the year, but Merry Christmas. And we'll see you again next week. Good luck with your investments.